Good morning and welcome to OptionsTender. It's Tuesday, Turnaround Tuesday, December 10th, 2024. So we're going to take a look at SPY and the multiple time frames. Of course, I'm starting off with SPX because this is a historical topping point here. And I want, with all these new viewers and members, thank you so much. The channel is just growing so well, and I'm so appreciative of this, and I hope you get great information out of this. With all the new people coming, I do these videos often, so consider, first of all, if you want to get this intraday, consider becoming a YouTube supporter for 99 cents. And I also like to tell people to play this at 1.25 or 1.5 speed so you can get these videos quick, get all the information fully instead of running out of time and ending the video halfway through. All this information leads and all the way to the ending, and they kind of link like a chain each and every day with new information. Okay, so let's go ahead and just jump right into it. We have SPX on the monthly time frame. We have 2029 top, 2000 top, and 24 top. Okay, and these are just pinpointed right at the edge there. And there's a video I'm gonna post the video. I compare it to 2000 to just show what a move just in the beginning is capable of. So we have to be very, very careful on where this could go. And I have arrows already pointing in these directions around these targets, just in case a move mimics such a devastating move. And it was worse in 2008, but I want to keep it a little bit more conservative on this point here, just in case there's any comparison or rhyme at that point. We have a channel top here as well from 2008, 2021, and in confluence with right now. So let's go ahead and go over to SPY. And I use SPX just because it has that information all the way back to 28 back there. But here's SPY. It kind of starts right over here at about 1990. It looks like 2 and 3. And here we go. So here's our bearish rising wedge at this point. We're right at the top here looking for a rejection. And I think that's starting now. But I'm going to show you those different scenarios in the lower time frame. All right. And just naturally, we're above, we're in a bullish state, but we're at resistance. So we'll see what kind of reversal we get here. And that first target will probably be that 8 EMA around the 567. So we'll keep that in mind. And you have a few candles here, right here as well. So you have a little bit of trading volume. So just keep that like 570-ish in mind for the moment. And then ultimately, we're going to test this breakout. This is a breakout point here. So 20 and the 50. So that 50 will be a good spot. And I don't know how long that will take, but that will be a good spot for support there eventually. But this is a very large time frame right here. So let's go down to the weekly. On the weekly time frame, here's what we have. I think I can, might be the wrong one. Here's a 10-year. All right, that gives us more information. We have the 2021 top, and we're right at that right now. With this correction, we had some retracements up here, and the last target was at this point. So this is a very good breakout point on this time frame where, I thought there would have been a top at this point. We had our last target, had a wonderful dip there, but then that V-shaped reversal, and we got on top of it and remained to the upside there, forming a wedge within the wedge. Okay, so on this time frame, there you go, the 560, we'll call it, 565 area is a good support there. And we do have a trend line that's possible. It's not a very good trend line, so I'm not going to give it too much weight. There's only 2 points at it so far. So if it decides to hold and get a bounce from it, that will be a very valid line that we'll keep an eye on. So it looks like we had a little bit of a throw over, and we're kind of testing that point right now going into CPI tomorrow. So that's a very good catalyst to watch out for it. If you're long, if you're bullish on the market, just at least protect your positions going into CPI tomorrow before the bell and PPI on Thursday. In the Elliott wave here's a look. That's where our target was, and you see how good that resistance was there. So once we got on top of that, you know that was a breakout. Now we have this red arrow here. So far we have a top here from last week. We have this red arrow just kind of pointing down that 515, and we'll call it 525 area. And the former, here's 520, former 23.6 retracement. So that was a good level as well. You see where resistance was and support. And then support again, coinciding. So you call this a zone here on the weekly time frame, 127.2. So that was the first major target. Again, you see we got above, fake break, and then got held above at that time to go to the next target. All right, so why do I have this arrow pointed down? There's a video, we'll go a lot more in extent with the 2007, but that's just pointing at it and possibly into 1229. So that's such a short time frame, right? But price can just accelerate. This is time and price compared to 2007. Nothing goes in a straight line, but that's just about a straight line there. So it's so volatile of a move. Do I expect this to happen? I don't know, but we have to be very cautious on that, and that's a huge move here. Let me just put the label on there. So that was a 14% move in about 23 days. I think 20 days was the actual 2007, so even shorter, but 1229 is a time price relationship. So wherever price is at that time, we'll see what happens, what occurs. Going to the daily. The daily time frame, we have this formation. This is our ending diagonal. We have a video on how to count an ending diagonal here and how to form it and the rules that go along with it. So make sure you watch that video. But this is our formation, and we're looking for a top for this to break down. And typically with a formation like this, you go and test the bottom of the wedge. That's just a natural move. And so that brings us down to just roughly that 400 area. And there's going to be a triangle here that's drawn. We can take a look at that. On a traditional sense, we have, it's a dashed line there along with this this uptrend line here. So this is the apex of it, around 448. So I said 400. This is more the apex, but the volume node is a little bit lower. So this would be the breakout point if price got down to here. And then VPOC, and there's actually one underneath as well for a volume node. So I do suspect that we'll get down to these levels eventually, but right here, again, this is kind of the layout of what we just want to be careful of, and we have great resistance support in this zone here from 530 down to about 523. I told you to keep in mind that 570 and 565, that's going to be a good spot too, just to hold on to. If we break down from that, there's a trend line underneath it. If we break down from this point, just watch out, because it's, price is just going to really, really start diving, and our scary scenario might just play out to in comparison. But right now, we're just getting started in the move. We're running out of time, so this could accelerate into we have CPI, and then we have FOMC going in next week. So we'll see what happens when price goes into those time factors and catalysts. You just have to protect your positions at minimum. And this is our bearish rising wedge, rejecting off the top there, and we're just we're testing that 2000. I believe that's the 2008 and 20 top. where we had to throw over here, and we're just testing the 8 EMA in that point right now. So we break down from there, and this can be a fake break, throw over, and price can accelerate from there. So I suspect that will happen tomorrow. And here is our other board. So we had from this retracement here, we had our targets. Our first one was 127 at the 580. I wasn't confident that price would make it above this, and it eventually did and gapped up with the election. So that kind of changed everything. That was a breakout. And then our next target was a 599. We made it there and some more. So price with all these negative divergences and such, I think we are getting exhausted in price, and it's a blow off top. I'm going to get rid of these now just so we can clean up our board. And we're now we're starting to look for retracements, and these will be just minimal areas. Maybe we see a reaction or so, but keep in mind this is this is the time and price of 2007, and by the way, after that there was 140 days of retracement, all the way at an 80%, almost 90% retracement in 2007. That took 140 days, over 3 months to complete, because you have that buying pressure, right? We probably are going to get in whatever move that we have here, the impulse move, we're going to get deeply oversold, and then we're going to have to retrace. Now, it doesn't have to do that. We can get some sort of bear flag that takes 30 days and then falls there. It depends on how oversold we are, what kind of formation happens. And so we just have to keep an open mind on all those. But I do suspect just in the more near term, we break down from the wedge and we test the wedge bottom. So it all makes sense, but does it have to do it in this time frame? No, not unless we get some sort of catalyst or black swan that makes that happen. So the retracements that we have here are from the wedge, from the bottom of the wedge to the top of the wedge. And we have the 382, which would just be, just an extremely shallow bounce here. If we want to go higher from that point, maybe that's, if you're a bull, maybe that's a good spot for it. But that also coincides with this breakout area. So maybe we just get a impulse down here and we get a steep retracement, and then we start heading lower from there. So that would be very bullish to hold this 568 zone. The 50%, now we're starting to break through, but that's still a good bounce zone. That's this whole consolidation area where this 382 and the 50% comes from. You start breaking down from there, and then that's much more. Even though you have a bullish setup, that's much more bearish. You're down to the 200-day moving average, and that's about 546. And again, you start going from there, and the odds of this being a bullish setup just start getting much more bleak. So if this is to be a bullish setup, then maybe this ABC becomes a 1, and then we go into a 2, and we go for wave 3, just to much higher levels, and we're probably talking 700 on SPX and more. So after that, we have the 520. That's just mimicking 2007. We just want to keep that in mind. That's why I leave it here. I'm not saying that's going to happen. I just want to say, hey, if price starts accelerating, just breaking through everything, slicing and dicing, then watch out. We have something like that happening. And if this is a historic top, then you should expect something that's unexpected, right? So there's the end of December. There's a price cluster time relationship, at 1219. That's right around FOMC, which is 1218. So we'll see where price is at with that coming in. Maybe that's a bounce zone. We have 1.5. We have a time and price coming into about 1.5 to 1.7 in January, beginning of January. So again, we'll see where price is when this happens. But if this is to be the beginning of the recession, then we were probably looking for a pretty bearish move. But there's going to be a big volatility in these moves as well, because there's going to be buying pressure. You have so many bulls in here that want the market to go higher and higher. So we're looking at huge bounces probably, or likely, and especially at the end of an oversold move, we should get a nice deep retracement, unless this is like the Corona crash where there's, sorry, we got a printing paper. So a huge oversold bounce that should take some time to play out before heading lower. So let's go to the 65. And again, there's the wedge. And now we can talk about the micro term. And so what's happening right now is I think this impulse move might be in. And so what's just happening? So we broke down from this really skinny wedge here. All right, impulse move, 1, 2, 3, 4, 5. And I just think this is an A, B. We're setting up a B, and maybe we get just a little bit deeper of a retracement here, possibly to 60, 606, 607. We'll measure that out in the next board. And that would be a 1-2 setup. And then we can start heading lower to a possible wave 3, 4, and then break down 5, back test, go down. And these are just these are just a reminder. I don't know if anything like this is going to play out. But Nvidia is breaking down today, so we'll see if it holds its trend line. I suspect that will be a very, very leading indicator. That we keep talking about SMH is just so bearish, and the market will catch up to those moves. So if Nvidia goes, so goes the market. All right, and so there's another way to draw. Since this move is over, I'm just going to borrow this line here, this trend line. There's also a potential point right here at this bottom, and to the, we're right at it right now. So potentially this bottom right here, okay? And so that's why we're kind of pausing here. So we could see just a little bit more of a bounce. Otherwise, it could just break down from here and continue, which would be very bearish because you have those shallow 1-2, maybe 1-2, and that would be just a pretty extreme move from here. But if this holds, just know that this is another shorting opportunity that we will take at that point. So again, this only has 2 points here so far, and so it's not a real strong trend, but this, I'm trying to line it up so it's perfectly, so we're perfectly on it now. See, we're definitely testing it right at this point here, so it could get a bounce from that point. All right, Qs. Oh no, not the Qs. I want to show you the retracement. So this 604 is a big area that we talked about. Again, I didn't think that we could get above it. We did, and we talked about if we get above it, then our final target here is 610. Doesn't have to make it there. It doesn't look like it's going to. But if price just so happens to do it, I move these counts to where this would be wave 4. And it came right into the 382 from the bottom of wave 2 to 3. That's the 382. The 40% retracement, just rounding, and so that would be a good low there if you're a bull, and we should see that move there. So if there's a big CPI move, maybe a gap up here, you can put protection on if you want. I'm not. I'm just going to add on to puts here. If it gaps up into 610, I'm shorting it again, and probably in a larger way. Okay. But the original account that I have is here. So if price doesn't make it up there, it's because I had the account here, and not because I had the account here. This was my original account where we got that gap up and crap. So that was a leading diagonal to a 1. And that was the top of 1. And that was your leading diagonal into a 1-2. And this was all wave 3 up to here. And price started to extend out. Where you got wave 4, and then wave 5 was an extension where it could have ended here as a wave 5, but it ended up being a 1, 2, 3, 4, and 5. So I have it as the top is in, but you know what happens if price gets up there. So this was my, again, I thought that was the top, but we got above it. So that was my kind of look at things. Now our look, if this is a 5-wave move down and this is complete, then that's more of what we're looking for right here. Not so deep. Maybe a 50-60% retracement. Then a wave 3, and again, these aren't, I'm not saying these are where the targets are at, but we do have good lows and stuff there. So, you know, maybe this comes down into time and price. And then, so the first one was a sharp move up here. It could be a flat pattern. If this ends up being a flat pattern, maybe this one is a deeper, sharper retracement into 40%. And then we get the fifth leg down there. So wherever it wants to go, 565, who knows? Okay, so that's what I got there in the Qs. Qs, there's no rhythm or rhyme here. That's being very conservative compared to 2007. That was after, or 2000, excuse me, because that was after the tech. Again, you got to go back and watch the videos for this video with 2008. It compared the Russell with the tech market going into the big boom, and showed, this is the everything bubble that people are talking about. So I think everything's going to come down in tangent rather than, the small caps being super strong and tech being super weak. I think they're all just kind of going to go together, more of a sequence. So just check out that video. And here we're holding the lows so far. It looks like a head and shoulders. But what here, we had an ABC clear right here. If price wants to go higher and we really get bullish tomorrow for a new high, then this is a 3-wave move. No matter how you look at this. That was rude. 3-wave move up here for a 1 and then a 2, and so that would be an ending diagonal that forms out of this if we do get new highs. But other than that, this is a 3-wave move, so the probability of this move is that we already have our high in. That's an impulse, so 1, 2, and then we're just getting a little micro 1, 2 in there. So I don't really have targets at this point. That's just laying something out if it's right in the middle, that if we're going to test the bottoms of the wedge. If we're going to test the bottom, it's likely that this is going to make 435 over time. Again, it doesn't have to be as sharp as 2007. In 2007, the initial move was over 30%. It might have been 35-40% on the first move. It was insane. I don't remember what the numbers were, so don't quote me on that. It could be 20 something, but it was a lot bigger. I'm pretty sure it was 30 or so. Anyway, so the breakdown from here, clearly our first point, if we start heading down, would be the wedge bottom, but we should break out of there. And then after that, I keep bouncing around, but a great support here would be around the 500. So that would be my guess to be a good spot for to take off some profit if you're holding near term. If you're holding really near term weeklies or so, but just extending out, and it's gonna be volatile. So you really got to have some longer term swings, maybe play into the bounces and then reshort them at that point, because there could be a back test here, and it doesn't have to back test anything. It goes straight down. So the first wave of all these moves are just going to be so telling on, it's going to give us a lot of information, and then we can start forming targets and really start to lay things out. But SMH, I'm going to give you a target today. So this could be the high in IWM. I suspect if this starts to bounce a little bit higher, it could be a leading diagonal where you have a 1, 2, 3, 4, and 5, and we just get a 50-60% retracement if this is to play out bearish. So keep that in mind. This looks like a flag, and it could break and false, a false break. Okay. Otherwise, if it's super strong, it makes new highs. Then you know maybe CPI was a catalyst or PPI, and so you could hedge. Again, I'm not going to. I'm very comfortable with my positions and putting new positions on, new money to work. Okay, and the reason why we do have unfinished business up here, and so we talked about this in a few videos. And holding the point, just like SPY, holding that former major resistance here at 127, got above it. Now it's holding it. So, this could go to 248. That would be the final target that we have there. Now, SMH, if you look at that 2007 comparison, you know that when SMH broke down, the market started to follow eventually, because this is our top here in SMH, but our top for everything else, lower high. The Qs had a top here. Okay, this is very, very bearish. We have a bear flag. We're back testing that bear flag, and we're breaking down pretty impulsively here. Okay, so we put on a trade with Nvidia. You can check that out if you're an individual member, individual analysis member. It's only $4.99. To do those, but we had 2 trade alerts, and so I wanted to make a video on those, so we did that. Now this is a very shallow, probably wave 1, 2 in here, and I think this is there's 2 ways you can look at this count, and you can look at it as a 1, 2, very large 1, 2, and then some sort of leading expanding diagonal where this is a in the turquoise 1, 2. Okay, that would be more conservative to say that this is a 1, 2, 1, 2 setup. Otherwise, you have expanded flats on both of these points here where you have a 1, 2, 1, 2, and this has to play out further. Okay, so either way, it's a bearish setup, unless you can count this as a correction somehow, I'm sure. So at this point, we have our setup. We broke down. We're holding on to these because being a wave 3, this is going to have very shallow bounces. I'm not playing any of these bounces on anything anymore. And here's our target. So we get our target from, if we're just counting this more conservative, as a 1, 2 to the bottom here, all the way up to here. So that's just a 1, 2 setup. And a wave 3 is pretty relentless. It's going to be the strongest wave into about the 207, 208 area. You see that's a very good support resistance. Support. And so we'll keep an eye out for a 207. Now that's just wave 3. So let me check out this trend line here. There's 2 touches, so I'm not super comfortable with this. Again, there's only 2 touches there, so we'll see if that can hold anything. But 207 is well below that trend line there, and we have here's a good support there, but we have a gap. See that? There you go. Holds that really good support. That's also the gap area, and then we'll probably get a little bounce off of here for a wave 4. Take some time, and then wave 5 will close the gap. So that can be all one wave right there, and then you can look for a bounce before heading lower at that point. And all that's doing, in a sense, is like everything else. You have the wedge. It's just testing the bottom of the wedge before heading lower. All right, so I'm going to get this out to you. Let's see, VIX. The VIX holding up pretty well, but the market is as well. So have some structure here. If the VIX does go to close this gap or makes a higher low, then the CPI is probably making new highs or so, or the market's just not doing anything. And so look out for this. If this goes lower, we could see a higher bounce in the market. But if we get our catalyst and start gapping, then we have 2 wedges here. We start breaking out from there. Goodbye. So just keep an eye on VIX. Have your alerts set. I got tons of alerts. Just go through. All right. That's it, you guys. Have a wonderful day. We'll talk to you tomorrow.